David, fast-growing ETF industry, $1 trillion in assets now. There are 1,100 ETFs and ETNs to choose from, but just 3 firms dominate the industry, according to National Stock Exchange, which tracks ETFs. BlackRock, State Street, and Vanguard control about 83% of the market. Should this raise a red flag for investors? Tom Lydon, editor of ETFtrends.com, joins us now. Tom, what about it? Only 3 major players control 83% of the action. Is that healthy?
Mark, this isn't a case of the 3 musketeers pillaging the countryside. I mean, no doubt that they command a huge percentage of the market share, but every day they're battling it out amongst themselves in a very good way. And the battle is down at price right now. I mean, you look at some of the instances where iShares commanded the lion's share of the emerging market ETF space, and then Vanguard come in and they slash the expense ratio almost by 2/3. So it's amazing. The individual investor ends up benefiting because expense ratios go down. And we're going to continue to see more price wars as the brokers get into this race too.
What brokers?
Well, you've got Charles Schwab, you've got Fidelity, you've got TD Ameritrade that are now going after custody for ETF shares within the marketplace. So they're offering trades free of charge. And that means that more investors are trying to get into these spaces where
what's in that for them?
Yeah. Well, what's in it for them is, performance in their portfolios. The idea that expense ratios are down, trading costs are down, that all goes to the bottom line of their performance over time. And in the past, if you're paying commissions, in the past, if you're paying high expense ratios and not getting the performance, that hurts your performance in your portfolio.
Tom, I've no doubt that you're right, but this is a market that's absolutely exploding at the moment, and therefore those 3 key players, 4 or 5, however you count them, are going to be chasing for market share at the moment. The danger will be if the whole thing is still very concentrated at a level that it flattens out further down the line, and then the heat may not be as great on them, and you may find that then you get fees beginning to rise or whatever. It's not necessarily a one-way street. It's just something we have to watch.
You're right, Simon. So here's the thing. There are other players. There's PIMCO that's going big time into the fixed income market. You've got ProShares with leverage and inverse ETFs that are becoming more popular. PowerShares that offer the fundamental weighting and have the QQQ. Ridex offers equal weighting in currencies. Van Eck has all the commodities. So what's going to happen is it's going to be tougher for the big 3 to command that market share, and there's going to be more competition down the road. So right now, it doesn't seem monopolistic to me.
So we're basically entering a new world very similar to Xanadu, and everything's okay in your view. And your professional, no problem whatsoever, Tom. Nothing keeps you up at night.
Well, the great thing, even though there is competition here, Simon, the key is these companies are very protective of the ETF space and making sure that there aren't chinks in the armor. So although there's competition, they work very tightly amongst themselves, and this competition is pretty transparent out there.
Well, now wait a minute. Now you're starting to worry me. They compete, but they work very tightly amongst themselves. That was my initial concern, which you kind of blew off.
Well, here's the thing, Mark. The Investment Company Institute, which oversees the mutual fund arena, has designated a certain area of their oversight to the ETF marketplace, because again, they are very disruptive to the mutual fund industry. Even though there's $1 trillion, there's over $10 trillion in mutual funds. And there are big companies like Fidelity, for example, that has missed the boat in the ETF marketplace. And the next holy grail that the ETF community is going after is 401ks. And that, I think, is going to be the next level up that we'll see in the ETF space.
All right, Tom Lydon, thank you very much, sir.
Thank you, sir.
Appreciate it.
Thanks, folks.
ETFtrends.com.